Welcome back. You're watching Closing Trades here on ET Now, and let's go across fundamental conversation. We have Vaibhav Sanghvi, CEO at ASK Hedge Solutions, joining us this afternoon. Vaibhav, give us a sense on how you're viewing markets and what exactly is looking attractive to you at this point.
So I think, from a market standpoint, right, while the breadth of the market currently, as you are witnessing, may slightly be, uncomfortable. But if I look from a medium to longer term perspective, and if I take the cues which have come from the previous quarter, results, my sense is basically I think we are looking optimistic from here onwards, wherein after 4 quarters, we had seen some amount of EPS upgrades kind of happening last quarter. And depending upon, and also on the commentaries which have been coming from the corporate side, which have been encouraging and pointing towards a better second half of FY26. In addition to that, if on a consensus basis, if we are growing about, say, 14 to 15% earnings growth for FY27, then I think the power of earnings is quite strong to see to that from a return perspective, we should be very, very comfortable in that sense. The only catch, or probably I would say one thing to solve for, is the FPI flows, which I would suggest that as we keep on growing in terms of the earnings, then they should kind of follow over a period of time. So that's something is how we are viewing the markets at this point in time.
Okay, so that's your take on markets coming in, but also talk to us, Mr. Sanghvi, about what is your very near-term view on the market, given the way the markets have fallen today, and they have been consolidating ever since we've touched that all-time high. Yes, the GST play is working out, earnings have been improving, but what could really be that one big trigger that the market needs to confidently move upwards now?
See, I think the latest round of volatility from a market standpoint is partly attributable, to the INR volatility as well. My sense is basically once that kind of stabilizes, we have the broader matrices of economy, of earnings, of corporate kind of profile pretty much in place to see to that we kind of keep, inching up, from a market standpoint. So I think apart from that, as I keep on mentioning again, is the FPI flow. We need to see some sustainability from an FPI inflow coming back to India, as well. And lastly, the number of IPOs, capital raise, which is kind of happening. I think it absorbs good amount of liquidity from the market standpoint as well. So few shorter term variables which are kind of affecting it. But as I mentioned, from medium to longer term, I think it looks pretty constructive.
Vaibhav, what is it that you're playing in terms of consumption? Because that could well be one of those, domestic consumption could well be one of the sectors which could be in focus largely on the back of GST cuts, as well as the government's perceived push to try and spur consumption internally.
You're absolutely right. I think consumption, if you look at it, I think has not done, anything over the last, many years. It is, if you see in the last 1 year, a combination of central government, state government, and the central bank have been taking consistent measures to, boost the overall consumption, thereby the GDP growth as well. So my sense is basically for next 12 to 24 months, we should be looking at consumption continuing to, perform much better. Now, consumption itself is a very large basket. It may start from discretionary to, and at the end of it, probably be followed by kind of staples. Also within the discretionary segment, anything which is, to do with, higher consumer experience, including your travel tourism, including your, consumer electronics, durables, autos, all of those are the sectors which can probably give you, at the first leg in terms of the from a consumption basket, which is to be followed at the fag end, by probably by staples as well. But overall, I think consumption trend from a next 24 months perspective looks pretty, constructive.
Consumption. Vaibhav, what within consumption are you most bullish on from an investor standpoint? What is it that is looking good from a value perspective and could well be very, very good from a growth perspective as well, where risk reward looks good?
So, autos, right? I mean, we can always say that, that the autos have rallied from, in the last 3 to 4 months on the first leg of GST cut. But I would kind of just go and remind back, when in the last time around in 2009, when the erstwhile finance minister did kind of come out with a stimulus in terms of reducing of excise duty. Then for the next 3 years, we saw a consistent increase in the overall volume growth, which was to the tune of about anywhere between 20 to 25%. Now, I'm not saying that we probably follow those kind of numbers and trend going forward, but looking at what is being forecasted and we are built into the numbers from a street perspective, it's anywhere between 5 to 10%. So my sense is basically there is still an element of surprise we can witness from an overall auto sector, which probably from medium term looks pretty good. In addition to that, I think all the platform plays, after some amount of correction, I think again starts to look well purely because at the end of it, I think technologically advanced companies are or platform companies are kind of grabbing market share from a traditional kind of ecosystem. So in that sense, any company which is able to grab market shares is something to be looked out from a consumption platform side as well. So those are the kind of quick bets I would probably say from a sectoral standpoint, looks pretty good.
And Mr. Sanghvi, what do you make of the valuations in the market right now, given that we've corrected quite steeply after hitting that all-time high? Do you believe valuations look good right now to make a fresh entry, or do you believe that there are still some pockets where the valuations are a little bit stretched?
See, I think we've been maintaining for some time that the large cap segment is looking pretty, good in terms of, or probably I would say in line with the longer term averages in terms of valuations. But I do still feel that mid cap and small cap on an overall basis, are still trading, expensive. Of course, bottom up stories can always be evolved from the mid cap and small cap segment, but from an overall broader universe perspective, our comfort with large cap is much better than the overall mid cap and small cap from a valuation standpoint. Lastly, I think from a relative standpoint as well, it is not from an India valuations perspective. When you look at in comparison with the other emerging markets from a global investor standpoint, we've corrected from the high premiums which were there as compared to the emerging markets, and now have come back within the longer term average band as well. So I think from that perspective, I think the amount of comfort is getting higher, especially on the valuations.
Okay, and Vaibhav, nothing works without flows, right? FI flows have continued to remain very, very weak. And every time we've come to a point where we start to feel, okay, it's turned the corner, it's the lowest ever. In terms of FI holding, we are at decadal lows now in the Indian markets. So every time we start turning a corner, we always start to feel, okay, it'll change now. But it doesn't. When does that change?
So a few things, I think, and a few variables, I would say. One, of course, the Fed interest rates. And typically, there's a direct correlation, when you see stronger Fed rates, you will see lesser amount of flows into emerging markets. And when there is lesser amount of flow in emerging markets, then India, is a sizable portion of that emerging market, which will witness lesser flows. But now I think we are, on the way for lower Fed rates. And if that kind of happens on a consistent basis, then probably there is a case to be made for incremental flows coming to the emerging market basket. However, it also doesn't mean that directly India would be a big beneficiary, purely because at this point in time, global investors are also looking at an overall AI theme, which is being offered by countries like China, Korea, Taiwan, and which has been garnering huge amount of your regional flows as well. So my sense is basically once you see the valuations getting pretty elevated on the overall AI theme, and in addition to that, you see some amount of reallocation kind of happening back to India, is when you may see consistent flow coming about. What has happened because of this overall reallocation inflow is that India used to be at a overweight, in within the emerging market basket, which has now actually become, after this whole AI theme, become underweight. So my sense is our consistency in growth, profitability of corporates, and a reversal of AI theme along with the softer Fed rates probably may see flows coming back to India. And lastly, I think capital gains tax is something also will always be on the minds of the foreign investors as well.
Okay, so that's on FIIs. But lastly, Mr. Sanghvi, are you looking at any new paper that's making its way in the market? So much exuberance in the primary market. IPOs opening this week as well. Is anything looking good to you?
So unfortunately, I will not be able to comment on a single name in any case, but overall, I think IPOs only help kind of increasing the liquidity in the market and offering better and newer companies to the investors. So medium to longer term, it's a healthy sign, but a shorter term, it can get constrained in terms of the liquidity from an overall market standpoint as well.
So good to have you on the show. Thank you so much for your time today.
Thank you.
Thank you so much. Okay, on that note, we'll slip into a very short break, just taking stock of where the market is right now. Has there been any recovery whatsoever? Not at all. We're still struggling to hold above that 25,900 mark on the Nifty. Still a 1% cut over there. It's the India VIX that's actually catching eyeballs today. A 9.5% spike coming in on India VIX today. We're above that 11.4% mark now. Nifty, Bank, Sensex and the broader end of the market continue to be under immense pressure. On that note, we'll slip into a very short break. Be right back with more stock-specific news and updates.